Hello guys, welcome to my channel. It's number crunching time again. So our topic for today is price to earnings ratio. So let's tinker on that one, okay? So P/E ratio is often used by value investors to help them decide which stocks to buy, okay? So but is it really useful? What can price to earnings ratio tell about a particular company? So here we're going to look at 5 years of data, okay? And let's check out the P/E ratio on that particular 5-year span, okay? So let's get started. So P/E ratio pertains to the ratio between stock price over the earnings. It can be stated as price over the earnings per share, where price is the price of the particular stock and earnings per share is the indicated earnings of the stock on an annual basis. Okay, in this video we're going to discuss about the trailing P/E, or what is sometimes called the current price to earnings. This uses the current price over the last year's earnings. So example, we have a price of 2019 and now we're going to use the earnings of 2018 for that particular year. Okay, so what are the pros? So it is very well known that earnings is a chief driver of the value of the company. The higher the earnings, the bigger is the dividend. Higher earnings usually command a higher stock price, and an almost constant earnings usually provide also a constant stock price. So if you have a constant earnings, a higher constant earnings, so the stock price usually is constant over that particular prices. Okay, so the problem is that with P/E ratio, you cannot just use it in earnings on if earnings are negative or close to zero, since it will not make any economic sense, or it will be nonsense to use. Okay, so you cannot technically use it in mining stocks, wherein mining stocks have no income or their income is negative. Okay, so in this video, I'm going to use again GMA7 as an example to demonstrate the use of price to earnings ratio for analyzing a company. Okay. So GMA7 is a publicly listed company in the Philippines. You can check it out in the website. Okay. First, we're going to visualize the data. So in this graph here on the top, you can see here that the behavior of price to earnings ratio over time. Okay. In 2015, it is very high in the range of about 27 to 35. On the graph below, it primarily caused by a 100% increase in earnings. So from 0.287, it is estimated that the earnings will be almost doubled for the next year of 2015. So the price to earnings ratio is very high. Okay. You can also see in the 2016 that the price to earnings ratio went down. Okay. From its previous range in 2015, it continued to go down in 2017 given 2016's earnings. Okay, why is that? Because in 2016, okay, it is a year wherein there's a national election in the Philippines, so it's already been taken into account. Okay, so 2016 earnings is very high. Okay, but it is expected that 2017's earnings will be much lower than 2016. Okay, so it seems that P/E ratio reflect the anticipation of earnings for the following year. Okay, but take a look at 2017 up to 2020. The level of the price to earnings ratio seems to be steady, while the range of the stock price seems to go down. So here, as you can see here, okay, the level here seems to be consistent. Okay, but the price of the stock, if you're going to check the price of the stock here, okay, it's going down. Okay, the only logical reason is the level of earnings. The earnings went down from 0.52 to 0.47, and then up to 0.45. So it's 0.54. I'm sorry. So it's just like fluctuating here. Okay, a small change, but it is well reflected in the range of stock price. Okay. 2019's earnings at 0.54 is higher than 2018, but there is an expectation there. The latest third quarter report states that for the past 9 months of 2020 alone, the company earned 0.80 per share, which is more than its 2016's earnings. Okay, so 2016 earns it's 0.75, but current earnings for the third quarter, for the last 9 months of 2020 is 0.8 per share. Okay, this is due to its rival network's franchise not being renewed by Congress. Okay, in the middle of the graph here, you can see that the company from 2014 to 2019 almost gives away its earnings to shareholders. Okay, so whatever the company is earning, it gives it to the shareholders. Okay, and it's to sum up all its earnings and subtract all of its dividends, only about 0.327 centavos per share are left to the company. While the company creates value through its earnings, it gives that value back to its shareholders. Okay, so it's very good, it's very positive. So it means that almost all of its earnings from this particular range of years, from 2014 to 2019, were given to the shareholders. So if you're a shareholder of the stock, so that's good news for you because you're getting these dividends. So the effect of this is that this provides a constant stock price at a particular earnings level. So you can see the stock price just ranges about 7.5 up to 4.5. It's just ranging, although it's going down a little bit. Okay, more range is going down. Okay, so it's just hovering at this range level, primarily because the dividends were given up. It is not stored in the company. Okay, the earnings were not stored in the company, and it's given away to the shareholders. So technically, it becomes like a cash cow. Okay. So if the earnings level will dramatically increase and is sustainable, that is a big if. Okay, then I think we may have a different range of stock price. This one can be a little bit higher. So what I mean to say is that if the 2020 earnings, okay, here the 2020 earnings and next year here will be sustained at around a mean of about 0.9 or 1 peso per share, of course, it is we can presume, or we can speculate that this is not anymore the price range of the particular stock, because there will be a lot of value generated to the shareholders, and the dividend yield will be higher. Okay, now we can go to this next slide, which is the histogram and the stock price. On the left side, you can see the histogram of the price to earnings ratio, and on the right side, you can see the graph showing the range of the prices but different levels of P/E ratio. Okay, so 2015 to 2016 1 year stock price is 7.6 to 7.5 range, and this is the histogram of that stock price level. Okay, so it's different. Okay, this one range about 30 to 36, while this one is the 14 to 16.5. So this is just another point of view if going to look at the if going to look at the difference of the price and earnings ratio over time. Okay, the next one is a per year statistics. Okay, in this table you can look at here the price to earnings ratio median. So you can see here from 2017 up to around 2020, so the price to earnings ratio are almost the same here. Okay, and look at the maximum range of the P/E ratio here. You can see that these are almost the same. So it means to say that it is a little bit lower going down. Okay, it's fluctuating, going up and going up again and going down. Okay, so but it's just currently on that range. Okay, and you can also look at the standard deviation, where you can see that it is just on this same range. Okay, even though they're different. Okay, and you can also look this median closing prices here. Okay, the closing prices are steady. The median is just steady. Of course, it's going down. Okay, and then you can also see the standard deviation, which is not that different. 0.2, 0.3, 0.3. There's no 0.4 and there's no 0.1, so it is a fluctuating. And then this is the minimum confidence level, 2.5% cutoff. Okay, and this is the upper range. So it practically just hovering in this level. Okay, that is what I'm trying to say. So for the summary of this particular stock, The range distribution of price to earnings over the years keeps on changing. Okay, so the total earnings less total dividends for year 2014-2019 is 0.32. So this stock is generally a cash cow. So these properties of this stock can be seen in the behavior of the price to earnings ratio over the years. Okay, so if earnings are going up for 2020 is above zero point 0.8 per share, okay, so it can be drastically affect the price range. Okay, so the main question that is for this video is that will this level of expected year 2020 earnings be sustained in the near future? If so, can it positively impact the range of stock prices due to an increase in value generated, which will then result to an increase in dividends? That is the main question. So if you're an investor of this particular stock and the price and the earnings for this is sustainable for the near future, high earnings, so you may expect, very well expect a high dividend yield for that particular stock. Okay, so your dividend if the dividend yield will go higher, and it will give you a lot of income for the price of this particular stock. Okay, so that is how it is now. So hope you enjoyed this video. If you learned something on how to use PE ratio, please click the like button and subscribe to my channel. Okay, this channel is about statistics, so this is not just only for finance. So I'm going to have some statistics and machine learning later on videos that you may want to learn, and you may want to view. Okay, so thank you for watching. Okay, see you in my next video. Okay, that's all for now. Bye.